morning, good afternoon, good evening, traders from across the globe, and welcome to the 1018th edition of Short-Term Trading Live with Oscar Carboni, and that would be me. OMNI. Hello, welcome back. New week, new everything. Remember, before we get started, futures trading is extremely risky and can cause substantial financial loss. Futures trading is certainly not suitable for all trading accounts, and always place your stops first, because in this business, a stop can be your best friend. Traders, we are filming this video on Monday night for trading Tuesday, May 7th, 2013. And what's on the board? For trading Monday, right off the bat, I'm going to show you a sideways or neutral omni. So what do? Right? We usually clap for the bullish omnis. We don't clap for the bearish omnis. What do we do for the sideways omnis? I guess we'll clap with one hand or something, right? I don't know what to do. We're going to clap like this. Anyway, we have a neutral omni for trading on Tuesday, at least for the onset, and I will explain why undoubtedly in the chart segment. Why, right off the bat, we want to go neutral, at least for the onset of trading for Tuesday, is this. The omni signals a neutral and completely dislikes the current daily chart formation. What does that mean? I'll show you once again in the chart segment, but right now, you've got something that looks like a nice big up bar in the S&P and the NASDAQ and the Dow. Then was followed by a little teeny inside bar, if you will, in most cases, or just a little teeny bar for trading on Monday. Now, I don't like this. Look, when I see a big bar and a little bar after this is a new high, when this bar is a new high and I see a little bar like that, I don't like what I see. So we're going neutral, at least for the onset. And again, I'll explain this better in the chart segment. But remember, after a large up move, then a little teeny consolidated move comes. I don't like what happens next, so I think we start off as a neutral in the emini, S&P, and NASDAQ. Then we have gold. The gold, although you know I've been a bear, and we've called the top in gold, and we've done quite well on most occasions selling rallies in gold. The Omni wants to do an about face for trading on Tuesday in gold, and it wants to buy the dips. So an about face in gold, and we're going to buy the dips. Remember, we're day traders. We could be bullish one day, bearish the next. We've been bearish gold and selling into the rallies because it seems to be in a big bear flag. But we are bullish the gold for trading Monday night through Tuesday, and I will show you that in the chart segment momentarily. Traders, if you'd like to hang out with me for 4 days here in Las Vegas, I am going to train you for 4 days and nights. It is called Omni Camp. It is tentatively going to be held the last weekend in June. The worst it could be is the first weekend in July. You know, one way or the other, right around the last weekend in June, we're holding an Omni Camp live here in Las Vegas. If you would like to train with me personally, come on down to livewithoscar.com, fill out your Omni Camp applications, and I will personally call you back. Traders, with no further ado, let's go look at some charts.
Traders, Oscar Carboni is holding another Omni Camp live in Las Vegas. Omni Camp is an intensive 4-day course taught by the Wall Street whiz Oscar Carboni himself. Oscar has been analyzing markets and trading commodities on and off the New York trading pits for over 30 years. Trading for a living is a very difficult business. Oscar will simplify the process so that you can easily understand and analyze the markets. Classes are limited. For more information, call 702-629-4755. Our phones are staffed 24/7. Futures trading is risky and can cause substantial financial loss. Trading futures is not suitable for all accounts.
Okay, traders, the first chart I'm showing you this evening is the S&P daily bar chart, the SPY, the cash daily bar. Traders, you might recognize that when the market puts in a new high and then has a little teeny day afterwards, it comes off. The market puts in a new high right here, has a little teeny day afterwards, and comes off. The market puts in a new high right here on this big day, has a little teeny day afterwards, and comes off. Here we are for trading Monday through Tuesday. The market put in a high and then put this little teeny bar in. That made it come off here, it made it come off here, it made it come off here. Questionable. We're going neutral. One of the reasons. Let's continue to look forward. S&P, I'm going to blow up the exact same chart just to give you a slightly better look. You put in a new high, then a little teeny day, and a dump. You put in a new high, a little teeny day afterwards. Well, this was your new high, a little teeny day afterwards, and a dump. You put in a new high, this little teeny day afterwards. So we have to be careful for trading on Tuesday. If you look at the NASDAQ, it does not look any different. You have a big day that runs up, and then you put in a little teeny day afterwards. When that big day happens to be a new high, the market seems to come off. This big day is a new high. Then you put a little day in, right? Under the arrow, the market comes off. This day was a new high, and we have this little teeny day afterwards. It should come off. Now, we're in a big bull market, so I'm not trying to tell you to go short. I'm telling you to sidestep the buy signal, at least for the onset of trading on Tuesday. Then to confirm, we look at the Dow, and the Dow's got the exact same look. And look what happened last time. A big run up for a new high. Then you put in a little teeny day, and off we go. A big run up for a new high happened on Friday. Monday we put in a little teeny day. I said we come off a little bit. We'll see. Then we have gold. Traders, I've been very, very bearish in gold for quite some time. But now I'm going to show you the weekly chart. On the daily, we've been bearish gold. Here is a weekly chart, traders. This is the 200 bar moving average. What I will tell you is that the gold does not usually take out the 200 bar moving average on a weekly chart. And I'll show you a blow up of this in a moment. But when you look at this, it got through it on 1 week and settled under it. So you had 1 week settlement under it. But then the very next week it got above, and last week it got above, and now we are here. That's 3 weeks above the 200 bar moving average. It's starting to turn into a hold. So I have no choice now but to start to respect this. We have to respect this. And that's that. Until it breaks the 200 bar now, I'm going to show the 200 bar moving average respect. Here's the very same chart, but now I'm going to zoom out a little. Traders, we do not break the 200 bar moving average in gold. This goes back for years. We do not break the 200 bar moving average on the weekly in gold. So now that we did penetrate it once and got through and are starting to hold above it, I'm going to show it respect, and I think you should as well. That can change momentarily. We get under the 200 bar this week, and we will completely go bearish again for gold. But for now, keep your eyes posted, and remember, sidestep this signal in the S&P because I don't like those teeny little days after a new high was set. So, traders, you've seen the charts, and if you'd like to hang out with me, like I said, you've seen the OmniCamp commercial, come on down to livewithoscar.com and fill out your OmniCamp applications. Now, traders, as I showed you, after a big bar gets made in the S&P and the NASDAQ and the Dow, if you make a teeny little bar, if the big bar was a new high, and the next bar is a little teeny one, usually a down move ensues. Now, we're day traders, right? We're bullish overall, but we think there could be a reason to go neutral in the S&P and NASDAQ, and that's how we'll start the day off. I will let the markets test some key omni levels. If it holds, we'll get into it. If not, we've got other markets we're looking at. We're looking at grains, we're looking at meats, we're looking at metals, we look at all the markets. So come on down, as I said, to livewithoscar.com. Come into my free trading rooms and allow me to help teach you to be a better analyst. Traders, we're looking to hold a contest tomorrow. The contest is a t-shirt giveaway. We like to give away these Omni t-shirts. This is what they look like. If you come on down to livewithoscar.com, come into my chat room. By the end of the day, we will be giving away a t-shirt mailed directly to you. On the back, stops are in, emotions are out. Come on down, find out the details of the t-shirt giveaway at livewithoscar.com. All right, traders, enough of the fun stuff. Let's get to work. I want to get right back downstairs. It's only Monday night. We got a long way to go. Stops are in. Dukes are up. Stay focused. And remember, always keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Hold on. Emotions are out. Rock and roll video number 1018, and let's sidestep the S&P for a day. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.